Welcome to Dave and Dharm Demystify, a FinTech Futures podcast, helping make sense of the world of FinTech and digital finance. Please sit back and listen as the two Ds take a subject and discuss it to make it clearer and easier to understand.
Demystify.
Welcome to today's episode, and today we are delighted to welcome a good friend of ours, Thea Loch from Lloyds. Would you just like to give us a brief introduction to yourself and tell us what you do?
Hi. So yes, I'm Thea. I'm the head of digital payments at Lloyds Banking Group. That means I look after everything which is related to how payments are made in our app. So that is the classics, fast payments, internal transfers, but it's also new ways to pay, such requests to make a payment by link, or it is also checks, which are still popular. And also I cover customer details management and KYC as well.
Hang on a second. I just got to ask about checks being still popular. Who are they popular with? So I was talking to my children who I mentioned the word check the other day and they looked at me blankly.
Oh, well, cash is also still very popular as well. So, we've got to offer many ways to pay. It's not just the newfangled ones, but it's also the traditional ones as well to meet all our customers' needs.
Fantastic.
Thea, you're going to defend the legacy banks. Can I call them the legacy banks or the heritage banks, whichever you prefer? But those banks have been here a long time. We had a very entertaining conversation, and I was actually very impressed by your responses, hence this kind of podcast. The discussion was along the lines of, these older banks innovate, or are they innovating? And, that's, I guess, let's start with that question. What are the banks really, what are you doing in terms of kind of innovation? And do you need to do much to defend yourself against Revolut, etc.?
So I think the reality of the large banks and why we have been around hundreds of years is because we have always ultimately innovated. We may not have been at all points the first one to innovate, but when there is a new change to the market, so if you think about when digital came in, then we did move. We did create the websites. We created ultimately mobile banking as it stands today. And we do move with the times. And that's similar, I think, where the challengers came in with some really nice designs, really nice intuitive ways of working within customer journeys. But I think we've got there now too. Our redesigned app is looking pretty smart, looking quite beautiful. We're introducing new ways to pay all the time in my space, but I think we'll go further than that, which is we're kind of at a baseline position where even with what the challengers are doing at the moment, we're at an exciting, I think, another juncture with the technology changes that are happening at the moment with respect to AI in particular, but also the way the world is moving will mean that we have a next era, I think, of innovation that is coming through in the next kind of 10 years. And I think we're well placed to go beyond where we are today, which I think is traditionally been quite transactional. And I think that's even true of a number of the challenges in the market to something which is far more contextual and will have to be a lot more flexible. And I think that's what we've been building up to in modernising our technology, is our ability to do that at scale.
I mean, just rewinding the clock, because, Lloyds Banking Group, you are a significant proportion of the UK's transactions go through the group every day, don't they? You've still got brands, but there's a kind of merger of systems, I guess, at the back. So are you at the point where the technology platforms are sort of integrated enough to be able to, instead of spending your time thinking about how you kind of knit all this together, that you can think about the future?
I think we're still going through it. I think traditionally we talked about a kind of spaghetti junction that used to sit behind the banks, as they had tended to have historically come from lots of different mergers of different smaller banks as they got together and became larger. So you ended up with this kind of spaghetti junction of multiple core banking systems sitting behind the hood. And I think we've done actually a very good job. Since the integration of Lloyds, it became a bit of and HBOS. It became a kind of specialist subject, I think, of within Lloyds, of getting down to having, more single systems to do one product line, or not having these kind of multiple areas that were only separated by brand and history. So trying to get to a much more simplified architecture. And then within that, we've got a longer term, which we're on the journey at the moment, which is to make that like modernized technology. So we're not basing us on systems from the last century, let's say. I think that's a nice line at which to draw.
Or the century before, even.
Yeah.
So.
Our products, some of them are definitely based in a previous century, but I could probably come on to that. But I think the reality is that you've got to get, technology is changing all the time. So that's where we've got to have this focus on getting to modernisation. So we've got this kind of balance between what we want to offer to our customers and offering them new ways to pay or new experiences, etc. But also at the same time, you have to have a laser focus on getting through modernisation, because you're not just trying to, I guess, change one system. You're changing full stacks within your system and trying to get it all across so that you can move at pace and be truly agile. Whereas at the moment where we want to be agile, we're still stuck behind release processes, etc. So it will be a massive shift when we get over that hill that I think will allow us to do a lot more of the ideas that we talk about in the rooms, and we'll have the pace that we have got used to because we've been so limited in some ways by the older technology. Imagine if we don't have that anymore, the speed which we will be able to go at.
But I mean, do you really think that the speed really does matter when you've got a client base like Lloyd's? Because, you're banking, I forget the exact number, somewhere between a third and a quarter of the UK's population. And the numbers that I saw last around your mobile banking, there were more transactions on Lloyd's than all of the digital banks put together. So if it were me, I wouldn't be so worried about the speed of the change necessarily, but it's the fact that I guess, you have to scale this and get this right for millions of people. I mean, it's fine for a small bank like Moniz or somebody like Clio or Plum when they've got less than 1 million customers to fail fast and try new stuff out. But you can't do that with 15 million users that are reliant on your app to pay their bills and everything. So I get that. But I also feel like, the world is against like the older banks because they've got older technology, but they fail to recognize the fact that they process most of the salaries of the UK, most of the bills of the UK, and everyone's day-to-day spend. So who cares about a little bit of innovation? I mean, yes, we'd like some, and we are getting it, is the message I hear, right?
And I think we're only in that privileged position because of what we provide to our customers. So the reality is we do need to keep meeting our customers' needs where they're at. We need to keep offering checks and cash, but also different ways that we will pay if that's what our customer will want to do, and they'll make their financial lives easier. Helping Britain prosper is not just the badge across the door, it's what we truly believe in as an organisation. And that means helping the organisation, so from our commercial arm, and our consumers being able to live their lives more prosperously from a financial point of view. And I think that's where we've got to keep that balance between innovation, etc. But gone are the days, I know you'll all be familiar with the days of the kind of the big bang integrations where you had to release something to everyone all at once, and that was many weekends of preparation to do it well, and some of them perhaps didn't do so well. But the joy, I think, of the more modern technology is that you don't have to release everything all at once to everyone. You can do more test and learn. You can really release it out to over 100 people if you want and see how they respond to it. So I think it's not just about, I guess, the innovation in terms of what we can offer, but the way that we'll be able to roll it out, the way we'll be able to see whether something works. Whereas at the moment, I think historically, we've tended to have a situation where we put a lot of love and effort into like a feature that we think everyone will love and really engage with. And then, it doesn't quite happen like that. And we need to, one of the beauty, we'll be able to learn that much sooner, and also with kind of potentially a less completed piece. But that's not going to be with our core payments journeys. Those are our high scale, high resiliency. We take very seriously our position with respect to the UK payments position, that we are so fundamental to it. And even if you're making a payment elsewhere, it might be coming to one of our accounts, even if it's from somewhere else.
One of the questions I've got is, I think all of this you need leaders to have the vision to kind of see that actually you can't arrive at the end point without putting the hard work in. And I think often if you look at the fintech market, it's very easy to say, why aren't you doing this? Like Lloyds, why aren't you doing it? Because as Dharm says, smaller banks are doing this stuff. But I guess what's really interesting is, you've got Charlie Nunn, he's come in from HSBC, and I think he would have understood like how important technology is from an organization like at HSBC and how complex all of these things are. And, the impression I get is he's actually very calmly saying, we've just got a job to do. And that job is to just be better. And when he talks about making Britain prosper, you kind of see in his eyes that he actually believes it. I just wanted to know from you is that leadership support, when people talk about its importance, it seems like Lloyds is quite a good example. Would you agree that sort of having that air cover is important? I mean, I know I'm putting you in your spot, so, you can't really say no, but...
I think it makes so yes, and absolutely. I think that if you don't have strong leadership and a clear direction and kind of target, I think people talk about the North Star at the moment. The North Star seems to be constantly moving further to the north, but all of that is underpinned by kind of data and technology, and having a leader who really has lived and breathed that and really understands it. And quite frankly, gives people a run for their money if you have to have a meeting with him around the data and tech that is underpinning it. That makes it a very different situation, I think, to where you might have been historically, where banking leadership was very much about being a banker rather than a technologist. And it's not just Charlie, it's all of his leadership team as well, kind of mold in that position. And I think this creates that strong target that we need to get from the position we have been in today to stop talking about the legacy set, stop taking on technical debt as we are moving through it, because we just have to pay that down later. And you have a much more a targeted position of where we're going to get to and how quickly we are going to achieve it, so that we have the kind of the platform that will last the next 50 years, etc. Although at that time it will need to be refreshed rather more regularly than we perhaps had done in the past. And I think that it's that vision and the plan that we have to get there, but also just the ambition of that we're not just going to sit on our laurels and sit being a very large bank and let other people create these experiences. We're going to be the ones out in front who are going to, from a good base, create something really fantastic, and that we're in the position where we'll do it, where we're one of the places that are being the most experimental with AI in terms of how we support both, but doing it in a very responsible way. So starting with colleagues, so starting with using it in the background with something called Athena, which is the knowledge base for colleagues, so that that you're not putting something out in front of customers that is making things up, because that is definitely not what we want to have happen. But what we can get from that, and the ability to review and contextualize, move complaints to the right place faster, that has all been created because we had a strong kind of already foundation from what we've been doing for years with respect to AI and having a chatbot and all of those embedded in all of our different business areas. And it's provided a really good basis from which to move forward. Now, this feels like we're at the foothills of where we're going to go to, but it's a really good starting position. And I think it informs the fact that we don't rush into things, but we are ambitious in where we intend to get to. And Charlie's only just got started, really. So he's got a way ahead of him.
I was at an FT event last year and Charlie was there. And I spoke to two other leaders of older banks. And I have to say, he stood out straight away as somebody that knew his stuff when it came to tech direction. And you could also evidence that by when I asked the question, he immediately said, I think you're obviously from a technology background and hence the question. So he's going to have, with his experience from Silicon Valley, the knowledge and the appreciation that out of 199 fintechs are going to fail, right? So you can't go around chasing all of these different opportunities, but you have to jump on the ones that do scale. But I guess just going back to our kind of conversation, and recently our good friend Leda has also highlighted this, well, most of the innovation action seems to be happening in payments. So can you tell us a bit about what you're doing in payments and to drive innovation?
So I think I will get severely told off if I give too many spoilers for what we might be doing in the future. But I guess I can talk about contextually where we're trying to get to. So I think you have the kind of the core, what everyone would understand. So I don't cover debit card or plastic, so credit cards, but I cover the main payment space, I guess, in terms of faster payments, for example. So I think that core remains similar, and it's about improving how we operate today. So we provide additional data around what you're doing when we're making a payment. So that will be an improvement in the future. But fundamentally, that's holding that service in a very kind of scalable, resilient, the deep importance to the UK economy that has. But then you've got like different ways to pay. So giving the opportunity for people to take different approaches to how they're going to pay, which is why we've got the request to pay opportunity, which uses the open banking rails, but basically allows me to say, Dave, I took you out to dinner, but I'm not paying for you, so you need to pay me back. And here's a link that you can use or a QR code in which to do that. So I think that will be quite an exciting position to have. And then I think it's going to be about how do we make it easier for people to manage their finances in a connected way with the rest of their family and with their friends. And I think also open banking that's not my area, but it has a huge amount of excitement around account to account payments, for example, and how that will work in a commerce perspective and what we're going to be able to do then. We have people obviously within Lloyds who are experts and definitely engaging with them, but what does that mean for consumers? Different fintechs, etc., are doing experimental products in that space. So it's definitely the next horizon to look at.
In terms of innovation and things, because, you alluded to the new mobile app, and we spoke to Gemma and Suresh, like how they brought the brand to life through the mobile app. And it's a brilliant story. How closely do you work with your UX and marketing teams? Because again, so often in the history of like when Dharmesh and I were doing the work, like we were the only people joined at the hip. Like you look inside the businesses and there's a huge sort of distance between technology and your kind of essentially the design and marketing people. How do you kind of work in Lloyds? And this is taking a kind of technology view in terms of how you work.
I think there has been a huge movement in our operating model from probably more than 10 years ago, that where you would have had the business and IT being entirely separated from each other. And at the point where you had almost the first agile labs, you got the concept of bringing everyone together. And so having a mixed model with engineers, with people from product, with people from design, etc. But that was done in kind of small experimental pockets, which then led to value streams, which were trying to do that as a whole, and then has led to the platform model, which pulls everyone together. And I think an interesting thing about, in theory, we should be able to operate incredibly autonomously and make changes. But actually, because we're a complex beast and because our technology is set up how it has been, we're actually heavily interconnected with everyone else. And so when you ask how often do you actually spend with marketing or with design, we spend every day with design. I was with design earlier today. I'm with marketing probably once a week for one reason or another. We'll be hanging out with our friends who do the equivalent to us, but for businesses. So that will probably be every other week. And so I think and from the business point of view, for the people who run our products, also it's not every day for me, but it is certainly every few days. So we're actually really deeply connected into those areas in a way that wouldn't have existed before in the old operating model. And I think that's actually something that Charlie really believes in. And part of why everyone almost is being a technology leader, and Ron, who's our group co, he talks about us getting to be the biggest fintech. And with that, you need technical leadership and you need everyone to come together to come up with the best ideas and work out the best way through it all. So one of the advantages, I think, of us being so deeply interconnected with each other and still having a bit of spaghetti is that we have to really understand how we're all operating in order that we can all move together, if that makes sense. That means you have regular and deep conversations with a very broad part of the organisation every single day.
It's really interesting that that's the case because you can feel it from the outside. I love that the largest fintech in the UK, or
The world.
Totally, absolutely. It's really interesting to kind of hear from the inside what the philosophical approach is around all of this. So I just wanted to turn a bit to the future. And I mean, again, you're probably not going to be able to say, but if you think about Lloyds in 10 years' time, where is it? Is it sort of a full agentic organization, or if everything's in real time, I mean, you're still going to be dealing in cash and checks? I mean, I know so much is up to what goes on in the world, but when you talk about or think about the future, what are some of the things that is going on in the heads of people in Lloyds?
So I think the point about where are we going to be in 10 years' time is probably easier to see than where will we be in 30 years' time, when the new organizations that are born with AI will have become the next big tech at that point, and they will be doing very different things. So I think in if I look at mine, not giving kind of anything away, but just in my head as to where we'll end up and where AI will take us is, as I said, I think we have been very transactional. I think we will become a lot more contextual. And where you will traditionally in banks had journeys which go step to step, I think those will be split up. And particularly because you will need to allow for a kind of agentic channel, for want of a best term, you will start to put different experiences together. So I think you'll become a lot more experience-led. And where, like I guess with the traditional piece from the last century in terms of banking became it had this kind of spaghetti junction in the background, but it was almost everything was very similar, but it was complex in the back. So the experience was very similar, whatever bank you went to, and then you had a lot of back-end complexity. I think where technology will take us, or where we should try to get to, is a much simpler back end where we are doing things not through multiples, as I said, ledger systems, but single ones, to allow us basically to have an incredibly varied experience ends where we, even though Dharm doesn't want them, we can offer these different journeys and different experiences that we just don't have the speed or capability to do today. And I think that's what's exciting. And that's why you need to simplify the back end of banking to allow you to actually do far more on the experience end and compartmentalize up the experience in a way that we've really talked about with technology and microservices, etc., but really compartmentalize journeys so they can be put together in different orders, in different contexts, and you're a lot more flexible about what your experiences can be from those different building blocks that I think are available to you.
So it sounds like you're describing the composable bank, the bank that can be put together however you want for any journey that you want. There's your pitch line. I had, we're in the beginning of like the digitalization stuff. I used to say that, look, take out all the physical elements, cash, premises, people, processes, paper, and then redesign things digital first. And inject those other things if you really must. Like if it has got to a point where a limit is breached, you must put it through to a human being. Or if it's a check, it must go into an ATM or a branch, etc. So when it comes to AI, I think we're going to go through some new changes. And I wonder what you think about this, is that banks have been designed in these kind of silo structures. The call center operations, the branch operations, IT, business, retail, the cards division, mortgage divisions, lots and lots of different silos. And I tend to think that history has been that people have been delegated the task of running those units to a size where they think people can run them. And hence we evolved into this complex beast with zillions of silos. But do you think the bank of the future is going to have less silos because we won't have the same physical limitations of human beings necessarily?
I think when thinking about where you might go to, I look at something like Google or Meta. Those aren't small organizations. So although they were digital first, they ended up being pretty large in the end in terms of what the organization covers. So I think the interesting question is the productivity almost of an individual unit within an organization, how much value that is providing kind of defines the your growth and where you get to in terms of how big the organization is. And Google has grown and grown, and it's allowed it to absorb something like DeepMind so that it can do some really exciting AI initiatives and achieve their objectives. So I think the reality is that large organizations are not going to disappear, and probably anytime soon, because they have been around for kind of history in terms of their efficiencies and cost efficiency of running things in a large way. I think the question is, how do the information flows come so that it doesn't matter that you are in one set of an organization? You have the information you need to make the best choices that you have available. I think that's what's really exciting about data, right? I think the problem is not so much that the people were siloed as the data was siloed. And so you didn't know what was going on in another part of the organization. And we're putting in tooling that means that I can go and have a snoop. I know exactly where someone else is going to hold their stuff. I can go and have a snoop and see what they're up to. And if I'm particularly interested, see what they're covering. And I think this kind of the openness and the ability to operate across organizations without being forced to, I think will be really valuable. But I think it'll be interesting to have when agents are almost part of the workforce, and we're thinking about that. But another thing is we never finished the digitalization kind of journey. We never, I always had this dream that we'd get to the point where there'd be absolutely no paper. Everything would be processed through a system. There wouldn't be any Excel spreadsheets or any kind of copying and pasting of systems. But I think we're still away from almost living the digital dream, let alone the AI dream that would sit on top of it. I don't think the Office suite has much to concern themselves for a moment. And Google created that because the demand for it still existed, like it does for checks.
It's fascinating because I think the pen is dropping for me that one of the really huge benefits of generative AI is discoverability. So, the ability to snoop, as you say, into what other people are doing, but do it in a way that is scooping up lots and lots of their output and summarizing it in something that you can understand. I mean, that is proper silo busting, and it's probably something that I don't think enough people have thought about or talked about. So yeah. It's really interesting to hear you say that. It's the second time in a couple of days that we've had a conversation and this has cropped up. But I was saying, if you want to go and understand something now, you can go and get an academic's view across multiple citations and have it summarized for you in a way that just wasn't possible before deep research kind of functionality came in. So I think that in itself will be a way of changing the cultures within large organizations. So thank you, because I think that's a really interesting insight. Sadly, we're running out of time. Dharmesh may have one last question, which I'm going to allow him to squeak in.
I just want to thank Thea again. I knew this would be a really enlightening conversation, and I just love the way that you really simply explain everything, and you're a great ambassador for the bank as well. So thanks for coming on to the show.
I would 100%, total clarity in terms of your view. And I sort of walk away from this with a sort of greater appreciation of what's going on inside Lloyds, and is a business, because of the sort of connections I've got through people like Suresh into it, huge respect for. And now I'm a customer as well, not just on the personal side, on the business side. So
I'm very pleased to hear that. And I've loved this podcast for a long time. So it's an honor to be on here. But also, you can now tell me person to person if there's something that you think we should be doing differently as you're a customer.
Fantastic. We will do. But thank you.
Thank you very much. Really appreciate it.
Thank you for tuning in to Dave and Dharm Demystify. We hope you enjoyed the show. Don't forget to like and subscribe, and tune in next time as we take another topic and demystify it.